I talk about everything that matters to you. And in today's video, we're going to talk about some finance, guys, and where is the economy going. So if you're new to the channel, subscribe. And if you're also looking to support my channel in any shape, form, or fashion, go ahead and subscribe to my Patreon, guys. Helps me out a lot. So let's get started. This is from Bloomberg Television. U.S. economy slowing faster, broader than anticipated, says Mohammed El Arian. Let's get started.
I think the U.S. economy is slowing faster and in a broader sense than most people anticipated, including the Fed. And I think that the market is catching up to that possibility, which has become a probability.
So I've said repeatedly, I've asked repeatedly, welcome cooling or unwelcome deterioration. Is this starting to sound more like the latter than the former?
It is the latter. There's no need for us to have an excessive slowing in the economy. This remains quite a robust economy, and if we do get it, it is because the Fed was late in recognizing that the economy is slowing.
Now there's a debate if the
Yeah, because, guys, look, at the end of the day, they jacked up the interest rates this year, and I'm sure you know somebody, whether it's in your job or your neighbor or somebody that's either been laid off from work or work is really slow. So I have a few like contractors that work for me, and they're telling me, like, they're asking me, do I have any work, because they have no work right now, guys. Things are really slow right now, and people are struggling, guys, at the end of the day. And so, I don't need the government to tell me, that the economy is slow, because I'm seeing it firsthand, whether it's tenants, whether it's contractors that I have, or it's just friends and family that I may know. Like, high-paying jobs are literally far and few between, let alone, average, jobs. So, look, guys, the economy is definitely slowing down, and if you're a business owner as well, guys, like, it's becoming very difficult to stay profitable in today's economy. So let's listen to more of what this guy has to say.
needs to cut deeper when they go in September. Do you think that they should in September go to 50 basis points instead of 25?
I think if they go, I'm laughing because so many people now are starting to say 50 basis points. To start with a 50 basis points cut means we made a policy mistake. And this is the Fed that surprised a lot of people by having to hike 4 times in a row by 75 basis points. So they were late starting, and if they cut by 50, they will signal that they're late starting to cut.
They're late in starting to cut interest rates, but that's also because they're starting to see the economy get really, really slow. I mean, I'm seeing it again. I'm talking to, other business owners. I'm talking to tenants. I'm talking to other investors. I'm talking to contractors, people in real estate. Things are really, really slow right now. And now the Fed's considering doing a 50, basis point reduction in the interest rates, guys. That's because they know something that you and I don't know.
It would be a mistake to cut by 50, but the fact that some people are talking about it, I think, is where the information content is right now.
Yeah, so I have an article right here, guys. Look, this is from Investopedia.com. This is D.R. Horton. You guys know who D.R. Horton? They're a major builder in the United States. D.R. Horton stock tumbles as Q4 results 2025 outlook disappoint. That's wild, because those guys are a major player in the real estate game, guys. And the article goes on and says key takeaways, right? Let's do key takeaways. D.R. Horton shares tumbled 12% Tuesday morning to lead the S&P 500 decliners as the home builder's fourth quarter results and 2025 outlook fell short of analysts' expectations. Quarterly revenue and profit both fell from last year as the company said lower mortgage rates weren't driving sales as much as expected. The company's revenue projections for fiscal 2025 also came in as well below estimates, guys. So they're essentially saying, the one that sticks out the most to me is that, yeah, their stocks are tumbling 12%, right? And, Tuesday morning, because the fourth quarter results and the outlook for 2025 fell short because people do not have the money. People are struggling to maintain employment, let alone buy a new house. You understand that? People don't have the money to buy a new house right now. The average person is barely getting by. The average person does not have $1,700 to cover an emergency, guys, let alone a $400 emergency in savings. So on top of that, you have quarterly revenue and profit both fell last year as the company said lower mortgage rates weren't driving sales as much as expected. Again, because even though you drop the rates, people don't have $10,000, $15,000, $20,000 to go buy a house right now. That's the issue, guys. People don't have the money to buy a house. So, of course, sales are going to drop. People's liquidity is drying up. People don't have what they had 2 years ago. And so you're going to start seeing this repeated cycle where they're going to stop building houses, and then your supply and demand is going to bottleneck. So supply is going to start actually we're going to stay in a supply shortage, and that's going to continue to prop up home values, coupled with the inflation, coupled with the rates. The Fed's going to start dropping rates. That's going to obviously allow for more inflation to seep through the real estate market, guys, and every other market. When the Fed drops rates, that's them trying to say, hey, let's try to stimulate the economy. Let's make borrowing cheaper. Let's make things, the cost to run businesses cheaper, and that's what they're going to do. And so, my prediction, I think you're going to see home values continue to rise over the next year or two. I think that you will see a slowdown in the real estate market, but I think the overall home value is going to continue to rise, in my opinion. So, I have an article right here, CNN.com. FedEx earnings miss could signal a slowing economy, guys. This is by CNN Business. FedEx earnings miss could signal a slowing economy. And it goes right here. It says FedEx said a weaker industrial economy produced a challenging quarter that caused it to trim its outlook for later this year, a sign of possible cooling in the wider economy, guys. The economy, sometimes seen as a bellwether for the U.S. and global economies by investors, focused most of its concerns on industrial customers who ship goods to other businesses, not on consumers who make up the overwhelming majority of the U.S. economy activity. In fact, CEO Rala, I'm going to botch this, guys. In fact, the CEO Rajesh Subramaniam said that the company is seeing e-commerce shipments start to grow again. But the industrial customers are the source of the worry for FedEx and for investors who sent shares of FedEx down 14% on Friday. So the economy is changing, guys. The economy is changing, right? The United States is a consumer-based economy, but the problem is that he's saying the industrial customers. This just goes back on what everyone's been saying, that the industrial sector of the U.S. economy is not very strong. So, so I agree. The soft industrial economy is clearly weighing on the business-to-business volumes, and it was definitely much weaker than we expected, and we have to make adjustments accordingly. The CEO, Subramaniam, told investors in a call Thursday following its late-day report, and as you know, shipments linked to industrial production are our highest yielding and most profitable. So, look, guys, things are not good in the economy. You know what I mean? They're just not. So people are, this is just one example. I covered in another video, as you guys saw, my last video. You've got Big Lots that's closing down. You've got 7-Eleven closing a bunch of stores down. Burger King closing stores down. You've got who was the other one? You have the 99-cent store closing down in California. You have Kmart just closed its last store down. There's tons of businesses closing down, guys. There's like a major restructuring going on, a major shift in the economy, I think, my prediction. And then we're going to close today's video, guys, with this right here. This is by Statista.com. Projected monthly probability of a recession in the U.S. from August 2020 to August 2025. So this chart, guys, shows you essentially the probability. So 40% was in August of 2020. this was like the probability of a recession, right? And then it obviously went down. It went down like April of 2023. The odds of recession was very low. That's when everything was booming, right? Everything was booming, right? And then you got into 2024, guys, and the odds of a recession has just kept going up. Look at that, guys. Look at that right there. You've got June 2024. Look at that. Peaking. You have almost 70% of think there's a recession on the horizon. And it really, I mean, even in right now, like we're in the end of the year, so we're in like October. Look, there's a like 46% chance of recession. And then look at that. You're going into December. People think now, projecting in December, there's a 62% of recession projection. And then projecting out, guys, look at that. Projecting out to 2025, they think there's a 61% chance of recession, guys. Let me know what you guys think in the comments below. Do y'all think there's going to be a recession? Do you guys think, like, what do you think is happening? Is it just the economy is just completely shifting and everything's changing? Let me know in the comments below what you think. Like I said before, please subscribe if you haven't already. And go check out my Patreon, guys. Support my channel if you can. It really helps me bring content to you guys regularly. I'm trying to pump out a video every other day. If not every day, just, guys, let me know in the comments below what you guys want to hear. And, I appreciate all the support, guys. And on that note, I'll talk to you guys later, okay? Peace out.